Welcome to today's market report. European stock markets traded higher on Tuesday, helped by promises of continued Federal Reserve largesse, along with better than expected UK employment data. DAX in Germany traded 0.6% higher at an all-time high. CAC 40 rose 0.6%, climbing to a new 52-week high. UK's FTSE 100 climbed 0.7%, while the blue-chip Euro Stock 50 gained 0.7%, also to an all-time high. European stock markets have struggled of late over worries that growing inflationary pressures could force the Federal Reserve to start tapering its ultra-easy monetary policies in the near future. However, Dallas Federal Reserve President Robert Kaplan on Monday reiterated his view that he does not expect interest rates to rise until next year, while Federal Reserve Vice Chair Richard Clarida pointed to the recent disappointing jobs report as evidence the US economy had not yet reached the threshold to warrant scaling back the central bank's massive bond purchases. These comments have helped to reassure the markets and put the focus firmly on Wednesday's release of the minutes from the Federal Reserve April policy meeting, which could shed more light on the policymakers' outlook on inflation. Britain's unemployment rate unexpectedly fell again to 4.8% between January and March, a period which the country spent under a tight COVID lockdown, and hiring rose further in April as the country reopened. Germany's constitutional court rejected a suit that aimed to stop the ECB's buying of government bonds, helping sentiment at the margins. General Lee stock rose 1.1% to a 52-week high after the Italian insurer's first quarter profits beat expectations, helped by the positive contribution from the non-life and asset management businesses. Imperial Brands stock rose 2.4% after the tobacco company maintained its full-year outlook despite its first-half profit and sales falling short of expectations, hurt by lower retailer demand for cigarettes in the United States. Vodafone stock slumped 6.2% after the mobile operator reported a 1.2% drop in full-year adjusted earnings, coming in at the bottom of its guidance and missing market expectations. After COVID-19 hit roaming revenue and handset sales, warnings of higher capital spending ahead also weighed on the stock. Oil prices pushed higher on Tuesday, continuing the optimism of the previous session as the major oil-consuming economies of the US and Europe further reopened on the back of successful vaccination programs. Crude futures traded 1.1% higher at $67 per barrel. Brent contract rose 1.1% to $70.20 per barrel, climbing above the $70 level for the first time since early March. Gold futures rose 0.2% to $1,870.60 per ounce. On the FX front, GBP/USD has been benefiting from the upbeat market mood, which weighs on the dollar. Robust UK job figures and less fear from the virus strains is boosting sterling, which is on course to hit 3-year highs, defying overbought conditions. Britain's unemployment rate dropped to 4.8% in March, beating the estimates and showing that the economy was strong when the reopening was just in its infancy. The more recent climate account change for April also exceeded expectations by showing a fall of 15,100. Several restrictions were loosened on Monday amid fears that the variant first found in India is spreading fast. Nonetheless, new studies showed that existing vaccines cope with this new variant efficiently. The UK is well advanced in immunizing its population, with 35-year-olds now eligible for a jab. The dollar has been suffering from the Federal Reserve's insistence that rising inflation is transitory. Cable has entered overbought territory according to the Relative Strength Index on the 4-hour chart. It has topped the 70 level. Immediate resistance is at 142.15, which is daily top and the highest since February, further above the 2021 peak of 142.40 awaits bulls. Beyond that point, the upside target is the 2018 peak of 143.75. The Eurozone economy shrank by 0.6% on quarter in the 3 months to March of 2021, matching minus 0.6% expected. The second estimate confirmed on Tuesday. The euro shows little reaction to the Eurozone growth figures, as euro-dollar flirts with 3-month highs of 122.20. The spot is adding 0.55% on a daily basis. The dollar index was down 0.2% at 89.955, falling to its lowest level since late February. Dollar yen was at 109. This is today's market news. Thanks for listening. We'll see you next time.